Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. It's Cyber Monday. Now, on Friday, Black Friday, we had that big down day in the market, 1,000-point down day. Now, Cyber Monday, we're getting to bounce back up. What I want to talk today about, is there going to be a stock market crash, or is this just a correction? And I want to do it by showing you some charts. Now, let's start with the VIX. Let's take a look at the VIX. Okay, here's a chart of the VIX. Now, the VIX, basically, it was trading around 19 on Friday, right before the big drop. On Friday, it went from 19 to 29. Okay, 19 to 29. That's like a 30% jump, or even a 50% jump. I guess my math was a little off there. But when the VIX jumps 50%, okay, that means you're going to have about a 90% chance that you're going to get a rebound rally. You see, because the market went down 1,000 points, and today we're getting a little bit of a bounce. Now, is this bounce over yet? Well, that's what we're going to talk about. Okay, so today, the Dow Jones, it's up about 100 points. The Nasdaq doing a little better. That's up about 200 points. And today, the VIX has come back in. It's come back in. It's down to 25. Is this correction already done? Should you already be buying this dip? Well, if you bought on Friday, you might want to be already taking profits. We are getting a little bit of a bounce. Now, here's two things. I want to give you my secrets now. Here's one of my secrets. All right. So this is the Nasdaq oscillator. Okay, now when the Nasdaq oscillator, you just type in a dollar symbol, NAMO. When this gets down here below 60, it doesn't happen very often. Happened twice in the last 6 months. But when it gets down below 60, it is really an oversold condition in the market. And that tells us that we're getting ready for that little bounce higher. And the Nasdaq is bouncing up nicely today. Now, okay, now here's for the same. This is the NYMO, the McClellan oscillator. Now, this is for the Dow Jones Industrial, the New York Stock Exchange. All right, now it's down here at 70. When it gets down here at 70, look, it's been down here once before in the last 6 months. But when they're both down below 60, the Nasdaq and the New York, that's time for a bounce. Usually within 1 or 2 days, the market will end up being higher than it is. Okay, so we were in the oversold condition on Friday, and that's where we're getting the bounce today. Now, will we get a little bit more of a bounce? Possibly. Now, here's the SPY. Okay, the S&P 500, the SPY. So we get this drop here on, Black Friday, and today we're getting the bounce up. Okay, now the 20-day moving average has been broken. So we broke below the 20-day. We're not down to the 50-day yet. Now, here's the thing. We're only down about 2%. Now, it feels like we're down a lot more from the all-time record high. All-time record high, we're down about 2, maybe 2.5%. That's not very much. Okay, now we are getting the bounce. I do think we can bounce back up to where the 20-day moving average is, which is a little bit higher from here. But after that, I think the short sellers are going to pile on. I think they're going to force it down to the 50-day moving average at least, and maybe down to the 200-day, which is actually way down here, about 430. We haven't touched that in a long time. But I do think we're going to get the pullback of the 10% correction that I've been looking for. Will it happen? We'll see. Could we bounce to new highs? Absolutely, we could bounce to new highs. Now, a lot of people say that the Federal Reserve will never allow a bear market ever again. They will just start buying stocks. They'll keep printing money. They'll just keep this thing propped up. They don't care if they destroy the dollar. They don't care if they, destroy you with inflation, that big tax. And they're just destroying it. And inflation's going to increase higher if they keep pumping the market higher. I don't think they can hold it. Now, people say it's different this time, Mike. We're never going to have a bear market again. Now, I don't think the Fed wanted a bear market in 2000 when we got the Nasdaq crash. I don't think they wanted a bear market in 2007 where the real estate market, the subprime crash. the great financial crisis. I don't think they wanted a bear market then. And of course they don't want a bear market now, but I don't think they can prevent it. I think a bear market is inevitable. Do I think this is the bear market? No, I think this is the correction. Now, from the correction, when we hit the 50-day moving average, can we jump up to new highs? Yes, I do. I think we can, but I think it'll be short-lived. I think in early 2022, we will get that bear market. We will get that market crash. And I think the crash is going to be at least 50%, maybe more. Now, this is just my opinion. Do your own research. Of course, my opinion is just what I'm doing. This is not a financial advice to buy or sell. This is just do your own thing. And I'm showing you why I'm doing what I'm doing. Now, right now is a great time to be a swing trader in the market because this volatility, I mean, you could have bought this on Friday and already be taking profits today. This is going to have a lot of swings up and down, up and down. I think this is a terrible time to be a long-term investor in the market. I think we're making a market top. I think we're at the highs. Can we go a little higher? Sure we can. But the risk-reward relationship just isn't there. There's too much risk to the downside. And the downside risk is about 50%. What's the upside reward? Maybe 4 or 5%. I don't think their upside reward is much left. I think the market's exhausted. I think it's getting ready to come down. Now, here's the Dow Jones. Now, the Dow Jones has already breached the 50-day moving average. Already it breached the 20-day, and on Friday it breached the 50-day. And, if it can't get above that, we're going lower. I'm telling you, to get down here to where the 200-day is. It hasn't touched the 200-day for a long time. So the Dow Jones is already down below its 50-day. Now the Nasdaq is the strongest, right? This is the tech stocks. These are the ones that, look at, if there's another lockdown, all these tech companies, Zoom, all Pelotons, all these are going to be rising up. Holding this market still hasn't dropped below even its 20-day moving average. Now this is not even down 2% yet. About 2% we're down. And like I say, it does feel like a lot more since that Friday drop we had. That Friday drop was painful if you were long. Okay, but now I'm telling you, we're only down about 2%. I think we're going to get down to 10%. I think we're going to come down to the 50-day. It's going to feel painful if you're long the market. But you can play these swings. You can play the upswing, the downswing. Yes, I think we do have more of the downside, but we'll probably get a little more bounce today. Maybe by the end of the day, we'll bounce up a little bit. But the downside still has more to play out. 10% is what I'm looking for. It's just a correction. The market needs a correction. I'm not calling for the crash yet. The crash is next year. Yeah, there will be a crash, and it's going to be a big crash, and it will happen in 2022, in my opinion. Okay, let's see what else we got. Now, here's the HYG. I love looking at the HYG, this is the junk bonds. This is the high-yielding corporate debt. There's so many zombie companies out there that just they need to get financing just to make their debt payments. So their bonds are what's known as junk bonds. Now, junk bonds are collapsing because interest rates are starting to go higher for these junk bonds. Now, here's a little secret that a lot of people don't know. When junk bonds come down, the stock market is soon to follow. That's why I think we're going to get that correction. That's why I think we're going to get this pullback. Now, when we get down to that 10% mark, yeah, I think it's probably a good chance to buy for another swing to the upside before the big crash. But wait for that. If you're a day trader, you can be in there playing these swings. Nothing wrong with that. You're probably making a lot of money today because that volatility is going to be going like this today. It's going to be going up and down. And if you're looking for that pullback, I think we're going to get at least a 10% correction, maybe 15%, but somewhere around the 10 to 15% is where I'll be buying a position to get the bounce upward, to get the swing to the high side. And we may hit a new record high before before the big crash comes. It's going to be a big crash. That's really all I got for you today. That's what I wanted to talk about. I think this is just going to be a correction. I think there's more to the downside to come, but I do think we're going to get a bounce. We're getting a bounce today, and that bounce can go a little bit higher. And that's where the short sellers are going to pile in and take it lower. I'm Tall Mike. Get out there. Have a great Monday, everybody. And if you like it, thumbs up. Hit the subscribe button so we can talk again later in the week and see what the market's doing. Bye-bye now.